From bailed out banks to raise interest rates on credit cards and fees on routine transactions. Travis Plunkett, legislative director at the Consumer Federation of America, is one of those voices. John Berlau at the Competitive Enterprise Institute thinks that these banks should do what is required to run their businesses effectively. Gentlemen, it is good to have you on the program.
Thanks for having us on, Maria.
So let's first start with the outrage here. How significant has it been in terms of fees going up and in terms of rates going higher?
Most of the major credit card companies have been raising interest rates, often for unjustifiable reasons. For instance, because of a supposed problem a consumer might have with another creditor. These practices are being reined in already. The Federal Reserve decided that many of these practices were unfair and abusive. What we're saying is that, especially because these banks are receiving government money, they should be told to curb these practices immediately. Taxpayers are getting essentially hit with a double whammy. They're paying taxes, and they're also being hit in their pocketbooks through these unjustified interest rate increases.
Yeah, but Travis, what do you expect some of these banks to do? I mean, look, you know, they look at their balance sheet, and they've got all of these assets that they can't sell. They need revenue. Where is this money going to come from? They figure, let me look at my businesses and get more revenue from my fee-related parts of the business.
Look, government has an obligation to make sure that if they're going to spur credit card lending, that it has to be fair lending. The last thing we want to see is the federal government encouraging lending that is abusive, that the Federal Reserve has deemed to be abusive.
Well, let me turn that to you, John, because here we are looking at all of this government money going into the banks, and what do? They turn around and they make it tougher for consumers. And in addition to doing what Travis is talking about, another thing that they're doing is they're cutting credit lines.
Well, Maria, we opposed the bailouts in their initial phase as much as anyone. We at the Competitive Enterprise Institute did. In fact, we participated in some tea parties today. We've got some tea bags here. But really, a lot of businesses get government subsidies, and the answer is to end those subsidies, get them paid back to taxpayers. I don't think, getting government money justifies, clamping down on fees at banks any more than baseball teams getting stadium subsidies justifies putting price controls, on baseball tickets. I mean, let the market work, and banks, to return the money to taxpayers, have to charge what the market will bear.
Well,
and competition.
wait a second. Let the market work. Letting the market work it means making it harder for consumers who are already strapped.
I think allowing competition to work and allowing new banks to form. Actually, we've called for expanding credit union, letting stores like Walmart's form banks, and all the competition will improve services and put pressure to bring rates down. So that's the way to do it, rather than government, dictated price controls like you had in the 70s under presidents from Nixon to Carter. The price controls just cause shortages, would mean a lack of a credit availability, and also could mean losing some of the rewards, like airline miles for the responsible credit card users who actually even don't pay interest because they usually pay off their balance at the end of the month.
The market isn't working for many, many Americans. They're really outraged at a lot of these fee and interest rate practices, and they're particularly outraged that right now these banks are getting government money. They feel like they are paying taxpayer money to support these abusive lending practices. So to say that this market is competitive, that there are reasonable alternatives to these abusive practices is simply wrong.
I'm arguing that the market should be more competitive. Lift the moratorium on stores like Walmart's forming industrial lending corporations.
Well, who's supposed to police this?
Well, that's the question. There hasn't been a cop on the beat. Federal regulators until recently have let the banks do exactly what you're hearing that this gentleman thinks they should be doing, anything they want. It's been the Wild West out there. Meanwhile, there are fewer and fewer banks offering more and more credit cards. The 6 largest banks, could totally dominate the credit card marketplace. It's getting less competitive, and now we have government money supporting these abusive practices. This is why so many people are fed up with banks and fed up with the credit card industry.
Maria, I think there should be a cop on the bank for fraud, but I think you have to let consumers and the banks they deal with, make these choices of what products are right for them. And I also would point out that some of the banks, like Wells Fargo, for instance, reportedly didn't want to take the TARP money. They were forced to take it so that other banks wouldn't have a stigma, and now some of them are having trouble giving it back. So, I mean, you don't just chase one failed government intervention with the bailouts with a further one as far as price controls.
Well, I mean, is it fair to say most banks are doing this? I mean, the problem is, you don't want government getting involved and telling these banks how to, operate their businesses and what you charge on certain products. But if you have everybody doing the same thing, you need somebody watching out for the consumer.
As I said, the 6 largest credit card companies control approximately 90% of the marketplace. Virtually all of them, with maybe one exception, have raised interest rates in recent months. And some of these interest rate increases have been completely unjustifiable. They're blaming it on the credit record of consumers, even though the Federal Reserve has said that that's really not a justifiable practice. So the point here is that these practices were under scrutiny to begin with, and it's particularly problematic that banks receiving government money are using them.
I see. And John, you think that consumer groups are using TARP as an excuse to campaign their cause?
I mean, in a way, this is what some groups have always wanted, and they're sort of using TARP as an added justification. And we're just saying end TARP, get that money paid back, and you're not going to get the money paid back any faster if you control what could be effective business practices and allow competition from credit cards, debit cards, lots of different payment options like the internet, things like that, and also lift some of the regulatory burden on community banks so that they could get in the game more, and credit unions, and you have you'd have better services and lower prices for consumers.
Well, that's a nice theory, but the reality of the credit card market is that it's dominated by the largest banks in the world, and that they have competed, quote unquote, to use abusive sort of back-end pricing tactics. That is, they lure people in with low interest rates and then unjustifiably increase their interest rates or assess very high fees on the back end. It is not a competitive marketplace. That's why federal regulators have already intervened. And the TARP situation makes it particularly egregious.
Well, how significant have the increases been? I mean, what kind of a cost on the back of the consumer are we talking about, Travis?
Well, it just depends on the company and the consumer. A number of the major issuers are increasing interest rates to the so-called default range. We're talking 25 to 30%. In some cases, they're doubling or even tripling existing interest rates. Now, for families who have been stretched tightly, their budgets don't have enough room to pay for these increases, and they're particularly upset because they don't think they've done anything wrong. In many cases, they haven't paid their bills late. They've been paying on time. They've been playing by the rules. They wake up one day and their credit card company claims they're a higher financial risk and that their interest rate should double or triple.
That's pretty significant, John.
Well, I think banks, one of the things we've learned from some of the financial messes, banks do need to engage in risk-based pricing, and there was too much credit, so there's going to have to be somewhat of a lessening. I think the way you do that is, as consumers do have some options now, and I would say, expand, credit unions, lift some of the regulatory burdens on smaller banks, and allow retailers like Walmart's to form industrial lending corporations and get into the banking business and have that competition rather than, price controls which could limit credit and also even hurt responsible credit card users if you ban risk-based pricing.
Right. We encourage people to use credit unions where possible, but many people just don't have access to a credit union. And smaller banks are not in the credit card marketplace for the most part.
Gentlemen, good to have you on the program. We so appreciate it. Thank you very much. We will continue this important discussion.